It is Tuesday, the 16th of April. Thank you for joining me. Now, a lot of my followers and most importantly, my subscribers have been asking me to show them how I identify my trade levels, especially today because we've had some good trades recently. I'm going to show you how I identified some of the trades on yesterday's trade sheet, which I've also posted on the free Telegram group. So if you happen to be one of the 1,000 people on the free Telegram group, you'll have seen the exact trade ideas spreadsheet that I give to my subscribers every morning at about 3 a.m. GMT. I posted it yesterday around 11 a.m. for you followers. So gold, which is pretty much my favorite market. I mean, we do have some phenomenal trades in gold, and recently catching that big move up has just been an absolute dream. The market's had a great run up. On Friday, we jumped to 24.31, a new all-time high. We've had many new all-time highs in the recent months, but the market reversed and closed lower on the day. This gave me an idea that we would probably test a support level around 23.25, 23.20, which I did suggest would be my buy area. Stop below 23.15, a really tight stop. This would have been between 50 and 100 pips with a target of up to 400 pips profit. And of course, that did work really well. If you managed to catch a buy down around the 23.25 price, we jumped to 23.91, easily hitting all my targets and going even further. I'll show you why I chose that level if I show you this shot of my 4-hour chart down here. There we go. You can see that I have all my fib levels going back to February. We have a confluence of fibs around the 23.25 area. We've also got some little swing lows there from earlier in April. We had broken the trend line, but I didn't take that too seriously. We're in such a strong bull trend. There was no way that I was going to take that as a sell signal, but you will notice how we are holding not only the fib levels that I put on my chart, but also the trend line. And we had the 50-period moving average on the 4-hour chart as well, just above the confluence of fibs around the 23.25 area, previous swing lows. This all said to me I had to try a long position here. And of course, it worked really well. We bounced so quickly. Would I try that level again? Yes, I would. I've got it on today's sheet, so you probably already know that. Gold to try again if we get down that far. Probably won't. Gold looks pretty strong. I've also got some buy levels in silver and crude. I'm going to go on to the euro-yen trade. Now, on the daily chart, this is a mess. We are in a bull trend. There's no question that price has been moving higher over time, but there's been these horribly long periods, months of just sideways inaction. And even now, we've been trapped going sideways for over a month. So how, therefore, did I identify this opportunity? Well, I isolated the price action going back to December and I put my fib levels on there. As you know, I like to see if there's a swing low around the 61.8 and the 38.2, where I put further sub fib levels so that I can build areas of confluence. And they do seem to be holding quite well. No swing lows, no moving averages to help me really on the 4-hour chart. But there was a trend line going back to December that intersected around that 162, 60, 40 area. We dipped a little bit, but recovered quickly. So that trade worked really well. And it was just really very simple. I was on the 4-hour chart. It was a confluence of fibs and it was the trend line as well. If I didn't have the trend line there, I wouldn't have taken the trade. I really would have liked a moving average as well. But at the moment, it's really tough to find opportunities. So that had to be good enough for me. And it did work really well. We hit my target as far as 163.30. You can't complain with an 80 or 90 pip profit when you're only risking 20.25. CAD yen, Canadian dollar versus Japanese yen, was another trade. Let me show you. Now, I have to say this was less convincing. We didn't really have a strong area of Fibonacci confluence. We did have the 200 period moving average on the 4-hour chart, and we did have some Fibonacci levels, and we had some previous swing lows. It was a weak argument, but I decided to take it. We'd got a little bit oversold on the 4-hour chart in a bull trend. It was enough for me to give it a go, and fortunately it did work pretty well. The buy level was at 111.10, 110.90. We got down to 110.83 and then rocketed. We certainly hit all my targets and way surpassed them. So again, we were risking something in the region of 25 pips to try to make 60 or 70 pips. That works 2-to-1 or 3-to-1 risk reward ratio. Not the best trade, but most people will be very happy with those kind of odds on a trade. Now, the pound versus the yen, I felt a little bit more confident about, actually. We have this fib level here at 190.00. We had a little bit of a trend line. We had a previous swing low earlier in April, little swing high here. I don't know. I just felt the price action was a little bit better. We did dip below the 200 period moving average on the 4-hour chart, and we certainly dipped below moving averages on the 1-hour chart. But anyway, we'd got oversold. I just fancied it. We were in a bull trend, oversold on the slow stochastic as well. It worked. Now, all of these markets are quite tricky to read going forward. I think we are carving out sideways consolidation patterns. I'm not seeing things in these bull markets which are telling me that the yen is about to push higher. So all the currencies that I'm showing you against the yen, I think they're going to hold their own. For now, I would still be interested in buying into dips on support levels. I'm not going to suggest shorts in these just yet. I think we're carving out consolidation patterns, but it's going to take a while for these patterns to form. So I'm just getting in there early, buying on the dips. Now I'll probably back off a little bit, not be quite so aggressive on the buys until I see what patterns form and whether I can be sure that this is a consolidation pattern rather than a reversal pattern. Now, the stock markets have been a lot of fun lately, and I did warn you for days that they are likely to correct to the downside. If you're a subscriber, you'll know exactly why, because I've been counting these bearish engulfing candles that we've seen on the E-mini S&P, the NASDAQ and the Dow Jones. And these were the warning signs to me that the bears were starting to gain control and that we could see a correction to the downside. Now, I even actually warned you guys who are in the free Telegram channel because I wrote a blog piece warning you that the S&P was showing flashing warning signals. So if you read that on April the 11th, everyone had the opportunity to be aware of my thoughts. We did break to the downside yesterday. We had a good support level around the 5160, 5150 area. We bounced off there initially on the first test, which is as I expected. We made money on that trade. We hit my targets, but then we reversed. I did warn you yesterday that we had a support level around 5150 and longs needed stop below 5140. Now that trade failed. I don't regret trying the long around that area again because you have to try long positions in a bull market when you hit support levels. I was prepared to even sacrifice that trade just to know that we'd broken down and I needed to reverse into a short position. Now, I normally would not suggest short positions in such a strong bull trend. I would try a long. If it fails, I would wait for the market to sink to the next target and support level and try along there. But yesterday, just because of those kind of signals, I thought if we break, we're going to go significantly lower and it is worth a short position. And I was right. We broke below 5140. I said we'd go to 5100, 5080 and even 5050. And it looks like we are on the way there. We've got to 5081 today. So we've got to within 1 point of my second target. And I do think we can hit certainly 5060, but we should have good support around 50, 50, 50, 40. I'll look at that when we get there and I'll let you know if I think whether we should try long positions. But yeah, as long as we hold below 51.45, 51.55, which I don't think we'll see again. But if we do, that would be a good resistance level. Then I think we can drop another 50 points or so from where we are. And we are already about 50 points away from where I'd suggested we sell. I do actually even have a sell level here today, don't I? Yeah, 51.45, 51.55. You'll see it on the sheet. I've just posted it in the free Telegram group as well. So you guys also have it as well as my subscribers. NASDAQ was another one which I sacrificed a long position. I had to do it. We tested a good support level in the NASDAQ at around 18,000. There are better reasons to buy for that trade on the short-term chart, but I'm not going to go into it. I just want you to know that now 1850 to 18,000 is a good support level in the NASDAQ. And I said yesterday, if we break 17,900, then we can sink further. We did do that. Now, if you jumped into the sell on a break below 17,900, which I had on the trade sheet yesterday, 17,650 is my overall target. So there could be a 250 tick profit in that if I am right. And we should have some good support down here around 17,640 to 17,580. I think that's a reasonable target. And I think that's a good support level. I've got it there as a buy if we do get there in the early part of this week. Okay, I hope you've got inside my head a little bit to see how I choose the trades that I put on my spreadsheet that I give to my subscribers every day. Gold and silver are my favorites. I've even got an oil trade in there today. If you are not a subscriber and you want this kind of analysis and these trade ideas on this spreadsheet delivered to you every day by about 3 a.m. GMT through my private Telegram group, then have a look for the link in the description box, sign up and get cracking. You have already missed several hundred pips this week if you're not subscribed or if you didn't follow the trades that I posted in the free Telegram group yesterday. Please do give me your comments. I'll answer them as quickly as I possibly can.